There are a few stocks in my portfolio that I really don't worry about. I do own a lot of growth stocks that I have to constantly check up on and see how they're doing and things like that. But there are a lot of my larger holdings that I really don't worry about. I could turn off my brokerage account, come back 5 years later, and I'd be confident they would deliver pretty nice returns and their businesses would be doing well. So two of those just reported earnings this week. And not that I needed to check their earnings because I'm pretty confident that the businesses were doing well. But just to kind of give some numbers, first one is Public Storage, the self-storage giant. Ticker symbol is PSA. In the second quarter, their net operating income grew by 6.6% year over year. Customer move-in volume was up by about 14%. The self-storage industry has been very strong lately and continues to be. Core FFO was up 7% year over year. The same store net operating income margin is over 80%. Very profitable business. A lot of people don't realize this about self-storage, and it's one of the reasons I don't really worry about the company long term. Public Storage has said that it can break even with about 30% of its property full. Right now it's about 90%, or a little bit more in most cases. So very profitable business. It's the chance of anything really terrible happening is very, very low. It's been growing steadily and continues to do so, mostly through acquisitions, but with a little bit of development as well. About 17 times the current year FFO guidance, so about 17 times earnings in real estate talk. Great dividend history, a 4.3% dividend yield. Stock I just don't worry about quarter after quarter. Great income stock, and as I'll talk about in a little bit, returns have been absolutely fantastic. The second one is Realty Income, a stock that I've talked about a lot. Actually, the first real estate stock I ever bought. In the second quarter, its adjusted FFO was up about 3% year over year, despite the rising rate environment. They're a much more debt dependent REIT than Public Storage is. They own a little over 13,000 properties that it leases to over 1,300 customers. The average lease has almost 10 years left on it. It's one thing they have really going for them. Public Storage, most self-storage businesses lease month to month. The average Realty Income tenant signs about a 15-year lease. That's why its properties are 99% occupied. Same store revenue is up 2%. It just grows gradually over time. These leases have annual increases built right in. The company has raised its dividend for 103 consecutive quarters. So these stocks can be volatile in the short term. I'm not saying that they're going to go straight up and I don't worry about the stock prices at all. They're very interest rate sensitive, for example. Real estate in general is a very interest rate sensitive sector. Borrowing costs go up. They're yield-based stocks, so pretty much anything with a yield is expected to yield more. When interest rates rise, yield and price have an inverse relationship. So that's why you've seen these stocks under pressure recently, although their businesses are doing just fine. Long term, the results have been fantastic. Public Storage has delivered, and this is I'm not misspeaking here, 11,500% total return since 1990. That's roughly 5 times the total return of the S&P 500. Realty Income went public in 1994. They've delivered a 4,900% total return since then. That's more than 3 times the S&P's total return. So although they are boring businesses, you don't get much more boring than a self-storage unit or a convenience store that's leased out long term. These are pretty boring businesses, but the returns are anything but boring. And they're two stocks that I've owned for a while. Again, have delivered fantastic results to investors over time. And I don't see that changing anytime in the near future. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.